Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Dennis Dick. And we have Jonathan Corpina on the line. He is a senior managing partner at Meridian Equity Partners, speaking to us live from the floor of the New York Stock Exchange. How you doing today, Jonathan?
Gentlemen, good morning. Happy Friday.
Happy Friday. Well, here we are. I'm trying to sit on my hands here. S&Ps have basically traded in a 10-point, 12-point range the entire week.
It,
Go ahead,
it really
Jonathan.
has. It's been a kind of frustrating type of week. First of all, it's a short week. We had a holiday on Monday, so markets were closed. And I think heading into that, investors knowing it was a 3-day weekend and a lot of different geopolitical things going on in the world, I think they took some risk and some exposure off the table heading into the long weekend. But coming into this week and throughout this week, there's been a few factors that have led investors to kind of sit on their hands and wait and see what's happening. We've got the current crisis with Greece that keeps bouncing back and forth. In the beginning of the week, there was a resolution that was going to be proposed, and then it was pulled back, and now we've got extensions for loans, and Germany is really digging their feet in here. So it kind of seems like that unsettling situation hasn't helped the overall sentiment for the market this week. Pretty light on the eco data for the week. Earnings season, we're 3/4 of the way through a little more, and no real fireworks coming out of that, including with Deere, what we're seeing now. So all of this kind of put together, investors have all the reason in the world to not do anything. And that being said, the market really hasn't moved in any one major direction, right? We haven't pulled back. We haven't vaulted higher. So investors feel like they're not missing anything at this point. Even if the economic data is or isn't supporting any movement in the market, sometimes you've got investors that jump into it feeling like they're missing out on something. Well, you're not really missing out on anything right now. We're somewhat running in place at this point.
So,
Jonathan,
go ahead,
I was
Dennis.
just going to say, Jonathan, saw this overall trend there last year where volatility was coming in, volatility was coming down. Then over the last couple months, we've had earnings season. We've had a lot of concerns from Greece, concerns overseas, concerns with falling oil prices. But as those fears and those concerns subside, you're going to start. I think you're going to start to see, as the fear starts to come out of this market, volatility start to come down, and maybe it's more of a trend that we're going to see these tighter ranges as opposed to everybody thinking the new trend is these 200-point swings every day. Last year we were getting a lot of days where we only had 50-point swings in the Dow. Do you see that trend possibly continuing too of reduced volatility?
I do. I think this is kind of the calm after the storm, so to speak. Towards December and January, we had tremendous amount of volatility in this market. Like you said, we were having 100, 200-point swings back and forth each day. It was a ping pong effect going back and forth. I think this might be the new norm for now, where some of the market activity has kind of grabbed a tighter range. Even oil, we're starting to see that volatility compress a little bit here, and I think overall that's going to help the sentiment of the market, because as we build this foundation, as we build this base, it'll help our market maintain the strength that we've seen in the past.
Let's go into the oil stocks and the oil sector a little bit. I guess bad news for ExxonMobil. Mr. Buffett exited the position in that completely and added to his IBM. I mean, what are you looking here for the oil patch? I mean, ExxonMobil still has a nice dividend, right? They still can make money, at lower crude prices. It looks like you're almost getting a 50% retracement here from the low of the recent move, now falling back. What's your take on some of the big oil stocks, ExxonMobil and Chevron Corporation?
I mean, clearly, Exxon, I think everyone has some sort of exposure to Exxon in their portfolio, and coming off the highs, I was trading, I think, around like 104, 105, and as this oil has made its downward move, it's taken Exxon along with it. Exxon is a stock, like you said, it pays a high dividend, and you're willing to ride out the wave on this one. But the pressure that Exxon has come under over the last 4 or 5 months has been pretty good. Same thing with Chevron. I put Chevron in the same category too. But as we've seen now, as oil has seemed to stabilize and somewhat rebound a little bit here. Some of the stocks in the oil and gas equipment and service sector have really benefited from it. Baker's up 12% over the last month. Halliburton's up 10% over the last month. Schlumberger's up 9%. So these are starting to benefit from this stabilization in oil. I mean, we've got real conflicting reports coming out about oil. We've got OPEC saying that we should be back towards that $100 barrel level. We've got Citigroup saying that should be sub 30. So that's a pretty wide range there. So it's going to be interesting to see how long we're going to be able to stay in this low 50 range for now.
Let's talk about EOG Resources from yesterday. Was that you standing at the post buying every offer in sight there? I mean, what an incredible move. They whacked it into pre-market, just opening tick straight up here. I mean, do the pre-market traders just really get things that wrong, or did just a big buyer just step in here to cover short or get some new longs on?
Yeah, I think EOG falling into that oil and gas category there. I think that was somebody making a significant bet on the direction of that stock there. When you look at the overall sector, like we've said before, it's been coming under a lot of pressure, and at some point somebody feels like the pressure that they've seen in it is going to subside, and they're going to stand up and get in there. The pre-market activity is really always tough to gauge. Less volume pre-market, higher volatility pre-market. And sometimes these stocks, especially a stock like EOG, which is a $90 stock, can really bounce around a lot. So it's hard to really pick a trend on pre-market activity.
Jonathan, what about the action at Walmart there yesterday? Because just talking about pre-market activity, this thing was actually bid up ahead of the report over $2. So somebody was gambling that Walmart is going to have blowout numbers. It was trading actually up in the pre-market, and then the report came out at 8:30, and they just slammed the stock down, and they slammed it down, and they kept slamming it all day. And here we are. It was trading over 88 in the pre-market when we were talking about it this time yesterday, and now this thing's trading down in the pre-market at 82.64. Still a lower beta stock, but just an enormous move here. You're really talking 5.5 to 6 points over the course of the last 24 hours in this stock. What are your thoughts there on Walmart? Like, first of all, why is somebody up there bidding at 2 points higher ahead of the report? Just that are they just gambling that it's going to be a good report, or do they think they know something? Well, why do you think that happens?
I think when you look at earnings seasons and earnings reports, people are able to gauge movement based on the earnings report. So if you look at a stock like Walmart, it could have a 5% swing either way based off of the information coming out of the earnings report. So I think people try to play that. They try to play to be on the right side of that trade. We saw it last week with a tech stock. The name is escaping me, but it had a 15% variation between by the time the earnings report came out, traded down, and then traded back up again. I believe it was Twitter that had a tremendous move in it. Stuff like that, people try to game that. They try to play those earnings reports, because when those reports come out, you start to see a lot of volatility. No different than when economic data reports come out. You start to see it bounce. The market bounces around a lot, and then finally finds its trend. So clearly, these bigger names in these earnings seasons, investors, traders more try to find that type of little opportunity to get in and out. And unfortunately, you can be really wrong on some of these things. And when you're really wrong, it hurts because your exit point is going to be clearly further away from where you got into it.
Friday options expiration here, Jonathan. We know there can be some crazy institutional action on the open and the closes on these days as traders are jockeying around their options positions here. What's it feel for like you down there on the floor on these option expiration days as opposed to just a regular day?
It's more on the close we start to see that activity, and we've been kind of monitoring it. Coming into today for the last couple of days, we start to watch different activity and see if some of those imbalances are being already implemented into the market. But as we get towards the middle of the day and as we get closer towards the end of the day, we really start to see some volume pick up. Not a tremendous amount of volatility, but it's just more volume and liquidity. And we've spoken before on days like today. I think days like today are good opportunities for the larger institutional investors to get in and out of stocks without making a big imprint on that stock, without leaving any any information behind a big close out of the ordinary will really raise eyebrows. But on a day like today, when you have a big volume close, you can easily chalk it up to an expiration. So that gives the larger investors opportunities to cover shorts, to go long, to take some risk off as far as getting big blocks done. So we'll start watching that throughout the day, and there are a couple of areas that'll stand out, but that can change throughout the day. Come 2:30 is when we'll really start to see where the trend is going to be.
Let's just talk about tech a little bit, and with oil all over the map and everything, it seems like tech has kind of just been holding us up here, especially something like Apple, Twitter's had a nice move, Facebook. I'd like to get your comments here on Facebook. Been in a trading range for quite some time. Broke out of 77 yesterday. Really nice move. Is this one you think people just be fading this range that's basically been holding since mid-December here, or maybe another leg up in Facebook?
Facebook has been in such a range for a while that it was only a matter of time before it was really going to be able to kind of break out at there. We saw highs in Facebook back in the 80s, at the end of last year, and it's clearly we're moving in that direction now. The valuation of Facebook, the exposure, the clicks, the users, clearly we've seen an uptick in all those areas there. So I think investors are feeling much more comfortable with Facebook as it starts to move out of this range. And Apple too. I mean, Apple's up almost 20% over the last month. The numbers that come out of there, as far as their revenue, as far as their reach, has been incredible. We've seen a couple of price target raises on this 140 to 160 range from a couple of places. Apple just continues to grow, and since that split, it's moved straight up, and the overall technology sector has really benefited from the moves in Facebook, the moves in Apple, the moves in Google. It just kind of helps pull everything together, where technology sector has kind of been a feared sector from some investors for a while, just because there has been so much volatility to it. It seems now that everyone needs to have some tech stocks in their portfolio.
Okay, and just one other tech stock for you, Twitter. Blew away the earnings, had to gap and go. Really is not giving anything back. That $50 level just looks huge on that. You think you get to see Twitter at in the lower 40s, but you see it in the lower 50s.
Yeah, I think we're going to get a small pullback in Twitter before we see it really stabilize and spend a significant amount of time in the 50s. It seems like Twitter, after earnings reports, always has a lot of volatility to it. We've seen Twitter move up and down 5 to 8 points every time earnings season comes around, and then you start to see some stability. It hasn't been at this price range for quite some time, so I think investors who might have been long from some of the earlier days might be using these higher prices as an opportunity to get out. So I do think we might see a little bit of a pullback in Twitter, but I do foresee Twitter will be in the 50s come third quarter.
Okay, final market thoughts here. We just got another dive under 2,090 in the S&P's 2,089 here. I guess if you're just going to be a strict trend follower, consolidation after a move up, the trend is higher. So the consolidation phase is just ready for another leg up at above 2,100. Your take on this, final take on this recent consolidation phase?
The longer this Greece headline is the prominent headline, I think it's going to add some pressure to our market. Overall economies will get scared by some sort of Greek currency exit from the euro, and we need some sort of resolution put in place. So I think short term, I don't think the market has the strength right now to hold up to the levels we're at. S&P kept tapping off into that 2,100 ceiling. We haven't been able to get really back there yet. I think it's going to take a little bit of time for us to really consolidate here, to move to the higher side. So I think on a short-term basis, we might get a small pullback, nothing significant, nothing of any fear or panic in it. But my overall longer-term sentiment is that we will be trending higher.
Okay, Jonathan Corpina joining us here on Benzinga's pre-market prep of Meridian Equity Partners. Jonathan, thanks for joining us, and always enjoy your look from the floor. We'll talk to you again soon.
Gentlemen, always a pleasure. Have a great weekend.
Thanks, Jonathan.
All right, Dennis, any imbalances popping up
Well,
there?
on these days, on the option expiration days, they're always enormous. And we saw a few buy imbalances at 8:30, a lot of strong buy imbalances. Those have all turned to massive sell imbalances. And that's why you're
Ooh.
starting to see the S&P futures really start to roll over here. We dropped about 3 points since Jonathan just came on. Seeing just massive numbers. And again, these can change quickly because just like Jonathan says, so for instance, you see a 1 million share of sell imbalance in Bank America. It's 1.1 million. But maybe there's some institution out there that says, oh, there's 1.1 million to sell. Well, I want to buy 1.1 million. And they might just send that order. And that would completely offset that sell imbalance if that institution came in. So really what imbalances are, they're advertising to major institutions to say, look, designated market maker is saying, I have some sell orders here on the floor right now, and I'm looking for help. I'm looking for people who want to take the other side of this. And sometimes there'll be a big institution that will take the other side of this. And on these option expiration days, just like Jonathan was just saying, there's a lot of institutions that are licking their chops, looking to get in or out of maybe some major stock positions. And when they see that there's a million, if I've been trying to buy a million shares, I know I can buy right now with very little price impact in Bank America. So just because you see these huge sell imbalances doesn't mean these stocks are necessarily going to open way down. But if we were to open right now, just for instance, a lot of these stocks would open significantly down. So it all depends on what institutional orders come in the next 37 minutes before we open.
Kind of an interesting chart here. You're talking about this Bank America just had that shellacking from over 18 to the lower 15s. Had a nice recovery. I don't know. Can we do another 50% retracement? 18.21. This one's going to be easy. $15. We'll call that a 3-point move, buck and a half. We did get back over 1650. We are coming back down now to fill the gap here. You had a gap between 16. Where's our gap at here? You had a high that one day at 1609 and then a low at 1622. We hit 1608 yesterday's session. It's got to be some big bids out there at 16. If I could maybe pick
Yeah,
this.
there is some in the book. I can
Yeah.
see over 100,000 shares at 16.
I'll
Sounds
buy a million.
significant.
I'm going to send my order right now to buy a million at 16.
You're going in there and say, okay, Joel, you know what? I'm putting my order in there. OPG order to buy at 16 as well.
You're
We'll see
probably
what happens.
you're probably going at
I did. I went
16.001.
above
Yeah, I
16.
knew it. You petting me, you son of a gun.
I gotta lean on that order. You just told me you're gonna be at 16, so I gotta go 1601 all day. I
Okay.
got Joel. I can hit. I can lean on Joel's order there.
You high freak. Okay. Anything else? Anything that's
They're selling balances across the board
Okay.
right now. But like I said, at 8:30, they were all buy imbalances, and they all flipped to sell instantaneously. So we still got 36 minutes. So all this information on these types of days, you got to take kind of with a grain of salt. It's information, but a lot more institutional order flow is going to come into this book yet here on this open. But for instance, GE has a million shares to sell. I'm looking at AT&T 600,000 to sell, Coke 500,000 to sell, Wells Fargo 500,000 to sell, Johnson Johnson 300,000 to sell, which is ex-dividend today, by the way. Procter & Gamble 320,000. So it's a sell balance across the board, but that information can change on these days. So don't be surprised if we see some buy orders come in and some of these sell balances do get offset.
And if you are fading those, you usually know pretty quickly whether or not they're going to come your way. So if you are fading those imbalances and it's not green on your screen right away, you might want to
There you go.
not wait around. For me, I'm just going to be keeping an eye on this Facebook today. Huge move yesterday. Got the 79.84. I believe that was yesterday's high. Let me double check that in Facebook. Big number at 80 here. Kind of went up to me. It was a technical breakout. Some news, not major news on that. I think if you don't get that follow through that 79.84 and through that 80 real quickly, you may get back some of that real estate from yesterday. But it's 8:55, Dennis. We're going to let you go here. Get ready for that 9 o'clock trading hour. And we're going to go to Brianna with the morning headlines.
Well, it's Friday, February 20th, and the European Union paymaster Germany softened its tone Friday as Euro finance ministers raced to break a deadlock over Athens' debts. Ahead of the crunch talks in Brussels, a senior Greek official said a deal was close. Germany said Greece's latest proposal was a good signal, although it did not go far enough in its present form. The Greek official, speaking on condition of anonymity, said Athens had made a lot of concessions to reach an agreement, and the Euro Eurozone should show some flexibility too. In the United States, former Virginia First Lady Maureen McDonald faces sentencing today for taking bribes from a businessman, with federal prosecutors seeking 18 months in prison and defense lawyers asking for a community service sentence. McDonald was convicted in September along with her estranged husband, former Governor Robert McDonald, for accepting $177,000 in sweetheart loans and lavish gifts from entrepreneur Johnny Williams in exchange for promoting his company's main product and anti-inflammatory. The 5-week trial in U.S. District Court laid bare rifts in the couple's marriage and tarnished Virginia's reputation for clean government. The U.S. government filed a lawsuit on Thursday seeking to block Cisco's proposed takeover of rival food distributor U.S. Foods, saying the $3.5 billion deal would eliminate significant competition in the sector. Cisco's share price was down 3.4% for the day, initially on concerns that the Federal Trade Commission was close to filing a lawsuit, and later on the lawsuit itself, although Cisco pledged to fight the action. Cisco, number one in its industry, unveiled its plan to buy U.S. Foods, the second largest, in December of 2013. It was controversial because they are the only two food distributors big enough to offer truly nationwide contracts to deliver food and other supplies to customers like hotels, hospitals, and fast food restaurants. The creation of that allowing the two to combine would reduce competition and give them too much pricing power. Walmart said it would raise entry-level wages to $9 an hour, a 24% increase from the U.S. minimum wage that some employees now earn, succumbing to long-standing pressure to pay its workforce more. The world's largest retailer said the increase would cost $1 billion and impact 500,000 employees, or about 40% of its workforce, although the hike falls short of what some labor groups have been agitating for. The move comes amid a growing debate in the U.S. over the widening gulf between the rich and low-income workers. Walmart has been a prime target of critics who say its low wages and inflexible scheduling are a big part of the problem. A federal judge ruled on Thursday that a long-standing practice by American Express aimed at keeping customers from using other forms of payment violated United States antitrust laws. The fees that American Express charges merchants are routinely higher than those of Visa, MasterCard, Discover, and other credit card companies, but Amex prohibits any merchant that accepts its cards from encouraging customers to pay with lower-cost cards. In a 150-page opinion, Judge Nicholas G. Garofus of Federal District Court for the Eastern District of New York wrote that such a practice constituted an unlawful restraint on trade. He said he would determine a remedy later. It is almost the 9 o'clock hour, which means we are going to take a quick break to grab our next guest. So we will be right back with Michelle Schneider. She is the Director of Research for Market Gauge. We'll be right back, guys.